Well, markets are set to close higher after solid GDP and jobs data, while the Fed has assured that stimulus won't be wound back anytime soon. We're joined by Matt Cheslock of Virtue Financial. Matt, with this solid economic data, is anything holding us back from 1700 in the next week or so?
Well, it doesn't seem that way, but I think it's going to take more than just solid numbers. We're going to talk about earnings. You know, that was a big focus last week. The Fed was the focus this week. And the numbers that we've seen, while they're not too awe-inspiring, the market is going to take them with some solace and say, you know what, the Fed's going to continue with their bond buying program. And I think that's what's keeping this market afloat. So, you know, I don't know if we're going to race to 1700 anytime soon. It might be a slow drag. You know, now we're into August. But without anything really further from the Fed, you know, we may be stuck in this trading range that we've been in.
Okay. And while we weren't really expecting anything from the Fed today, there are expectations that something may happen in September. Do you think that's priced into the market?
I think it was priced in. I think they priced it in back in June when he came out to the market and said we may be tapering back, and it wasn't so well received. So while it's priced in, I don't think it's negatively priced in. I think, you know, we're probably saying, you know what, this is going to occur for a long time. The next person who takes over for me is going to continue this, because that's not going to, the administration's not going to change their tone here until we get some substantive real data that we're not seeing it. We're not seeing it from the jobs report. Maybe we should be trying to do a little more than 85 billion a month. Maybe if that does something, how about we try 50 billion? I think we need to mix it up. We're a little stuck here, and we're too dependent on this number right now.
Okay. And while earnings season seemed to start out quite strongly, some of your colleagues have suggested that the quality of earnings is deteriorating as we go on, and that the revenue outlook isn't fantastic. What's your take on that, broadly speaking?
Well, maybe they're trying to talk it down a little bit more. You know, we had such high hopes for the second half of this year. While the numbers have been, I guess, pretty good. They were, you know, I think they were 68% beat. That's a pretty good number. But while the forecasts haven't been that great for going forward, so I think a lot of that has to do with the economy. No one's really sure. No one's seen any market improvement in what we're just expecting it to improve, and we're just not seeing it. So I would be very careful to see what these companies do. If anyone forecasts higher earnings and then misses, that company's going to be in big trouble next quarter.
Okay, so finally it sounds like you see us treading sideways or consolidating for the medium term.
Yeah, I'm always generally a little bit more cautious than most. I think we've been stuck in this range. We've had a fairly successful earnings season, as we mentioned. It's been pretty good. We've had an accommodative Fed, and that really hasn't allowed us to break out of these markets. So I would be very cautious now. We're not seeing a whole lot of volume. We're seeing volatility without volume. We're getting into August. You know, maybe it's time to take a breath and see what this market does on its own.
There you have it. That was Matt Cheslock for Virtue Financial, and I'm Jane Searle for The Deal.